Saul, welcome very much to Scaling Europe. I'm thrilled to have you here.
Great to be here.
Firstly, congratulations on the results. Obviously, the DealRoom report came out with a power law ranking, the Thoroughbreds top 100. Phoenix Court, consisting of LocalGlobe, Solar and Latitude, came out as the top investors across EMEA. How does it feel?
You know, you and I have talked about this before. You know, the amazing thing for me, having been at this for a very long time, is how far, you know, the part of the world that we're in has traveled. You know, 20 years ago, if you'd said to me that there would be 5 or 10 venture-backed companies doing over 100 million in revenue, you know, when we were at Skype or at Love Film, I would have said, wow, that's so cool, you know. And I think what's really interesting about the DealRoom report is, you know, there are now 700 companies in EMEA doing over 100 million in revenue. And, you know, if people didn't realize it before, you know, that tells me, and I think, you know, it should give everyone, you know, in Europe, in EMEA, in the UK, or in what we call New Palo Alto, just an incredible sense of like, wow, look how far we've come. And if you look at that cohort of, you know, 700 thoroughbreds, you know, how big some of these companies are going to get. You know, we say a lot in our business, you know, the last 2 decades have been getting to the starting line, and it's the next 2 decades where it gets really exciting. So, I mean, I think it's just an incredible milestone, and I'm really grateful that, you know, we now have evidence and we now have data to, you know, say, to show what, you know, many of us have been talking about for years. But, you know, to me, the fact that 700 companies make up the Thoroughbreds list, and obviously there's more to come, is just super exciting.
Yeah, absolutely. And the impact that they're having is phenomenal. I think part of the report said that of those top 100, for those top 100, they've created 360,000 jobs, enterprise value of nearly $700 billion. And obviously, you know, Phoenix Court was ranked as the number 1 investor. And like the first question I really wanted to ask is, what has Phoenix Court done so well to enable you to kind of be the top of the leaderboard?
Well, look, I think what the leaderboards reflects, and I think, you know, this is why it's talks about being a power law ranking, is that, you know, the earlier one is able to invest in these cults, these thoroughbreds, and these unicorns, you know, obviously the earlier it is, the harder it is, I guess, on some level. And, you know, we've been really fortunate that, you know, this year marks our 10th anniversary, that, you know, for cults at seed, for thoroughbreds at seed, and for unicorns at seed, you know, we were ranked number 1. And that means that I think, you know, across the portfolio, you know, we now have 54 companies that are doing over 25 million in revenue. I mean, collectively, they would be generating over 10 billion in revenue. There's average annual growth rates of 40%. You know, you talked about jobs, you know, those companies, just the thoroughbred companies in our portfolio, and there are 27 of them, you know, represent 40,000 jobs. And I think, you know, it's just really great, you know, in our 10th anniversary to be able to sort of reflect back and say, you know, not only have we been lucky enough to be involved with some of these companies from the seed stage, but we've really seen them go through early growth, which is, you know, where we have a fund called Latitude, and then, you know, 8 of them now, you know, at the scale up stage as well. And, you know, that's our solar fund. And, you know, what we always really believed in was that, you know, this was an ecosystem that was going to produce over time outsized returns, because, you know, we were going to be able to invest in at the earlier stages amazing businesses. And I think, you know, it's only really in the last 5 years that we're starting to see that play out at scale. And, you know, what's exciting to me is, what is going to happen, at least, just looking at our own portfolio, to these 54 companies doing over 25 million in revenue, because, many of them will cross the 100 million threshold, 27 already have. Many of them will then cross the $500 million threshold. Many of them have. Many of them will cross the $1 billion threshold, and then all of a sudden, you're really looking at not one-offs, but you're looking at a sort of a sustainable flow of companies, and this is just within our portfolio. Obviously, if you look at the total list, it's sort of a mouth-watering situation, I think, for this ecosystem, and one that's taken, as I said, a lot of time for a lot of people working together to get to. But I think everyone should feel pretty good that, as I said, there are 700 Thoroughbreds in EMEA at this point.
What it is it's really exciting because it gives you an opportunity to look into the future and to see the next generation of these European tech giants, which don't necessarily have the valuation news or the hype or the unicorn status just yet, but you can see that path that they can go down. What do you think about this shift from focusing on unicorns and valuations to the fundamentals and to revenue? Do you think that's something that we as an ecosystem need to focus more on?
Look, I think the secret over time of Silicon Valley is it's not just the sort of the hope and promise of unicorns, and we should never lose this idea of hope and promise, because that's what's so exciting about the innovation economy, is that we're always early. There is more growth ahead, but at a certain point in time, fundamentals matter. And when you can combine the hope and promise with fundamentals, then you get champions. And I think, what's really, really interesting is that, we know that the science base, the technology base, the engineering base in the UK, in New Palo Alto, in Europe, in Israel is world class. That's never been a debate. What we're now seeing is, the hope and the promise of all of that innovation is now turning into businesses that have strong and solid fundamentals. And I think the combination of these two things is what creates the magic. But when you have cohorts this big, at the Thoroughbred stage, in the Colts range, the 25 to 100 million range, and at the unicorn range, you can see a bright future ahead. And it's not just in one sector, and it's not just in one region, it's cross sectors, and it's across the region, across EMEA.
When we talk about fundamentals, do you think that annual revenues goes far enough? We're seeing a lot of AI companies hit kind of ARR milestones faster than we've ever seen before. Companies doing 100 million in 12 months, but whose kind of fundamentals are not quite there yet. That they're seeing much lower margins because kind of they're built at the application layer and they have to pay a huge amount of their revenue to the models themselves. So do you think that revenue doesn't go far enough? And perhaps maybe we need to go even deeper to fundamentals to really talk about whether these companies have solid foundations.
Look, I think the power law is just an incredibly powerful concept, and I think the thing we need to remember is that only 1.3% of venture-backed companies ever become thoroughbreds. 1.3%. Only 1.8% ever become unicorns. So to hit these thresholds, you are already an outlier company. The fact that we are now debating whether 100 million is a good threshold or not, to me, as I said, having been in this business for decades, it's just incredibly exciting, because, we're basically saying, oh, you got there too fast. Are your margins strong enough? You got there too fast. What's your churn going to be? All of those are fantastic questions, but they're questions where people are challenging fundamentals. They're not just challenging hope or promise. And I think, this is what's really exciting. It's not about, valuation is the only yardstick, because, what is valuation? Valuation is completely subjective. It's in private markets or in public markets. It's a consensus amongst investors, either private or public. Fundamentals, whether it's revenues, margins, cash flow, etc., all of these things are incredibly valuable ways to assess or analyze businesses. But the fact that this is where the discussion has got to tells me how far we've moved. And that the thresholds we're talking about is 100 million is incredible.
Yeah, no, it's definitely something to celebrate in itself, of course. I mean, 700 Thoroughbreds is absolutely phenomenal. I want to talk also on your, LocalGlobe is, I think, the more well-known brand behind Phoenix Court. It's the one that's been incredibly successful, backing these Thoroughbreds, colts, unicorns at the very earliest stages. Lots of guests that I've had on this show have talking about the problem in Europe being late-stage growth, late-stage capital.
Yeah.
Can you talk a bit about the role of both Solar and Latitude and trying to fix that problem and what the vision is fundamentally for those kind of funds going forward?
Every single investment strategy that we have, from LocalGlobe to Latitude to Solar, has started with us investing our own capital from our own balance sheets. And, we started off, my dad and I, as angels, and that evolved into a seed fund, LocalGlobe. We started to notice that some of our best seed investments, like Wise, were getting into the early growth stage. And when you see month after month, quarter after quarter, double-digit growth, you're like, oh, this company's still got a lot of room to run. And so initially, Latitude was something we created, as SPVs with some of our LPs. And then, instead of it just being one company like Wise, it's like, wow, there's a big cohort coming. We need to institutionalize this strategy. And that was the birth of Latitude. And we're now on sort of fund 3 of Latitude. And then, now you get the story. All of a sudden, you start to see, there are 54 companies doing over 25 million in revenue. They don't stop being great companies when they hit 100 million in revenue. They keep being great companies. Like, we should have a vehicle to invest in them at this scale-up stage. So, now with LocalGlobe at seed, with Latitude at early growth, and with Solar at the scale-up stage, we have a set of funds that allow us to sort of match the evolution of the ecosystem, that, we're no longer an ecosystem that just starts up. We're an ecosystem that can scale up. Now, it doesn't mean we have the necessary capital yet in the ecosystem at the scale-up stage, and this has definitely been a big focus of mine, at least from a policy perspective, over the last 4 or 5 years. But, I think the good news is that the evidence is now there that demonstrates with 700 Thoroughbreds, these are great investment opportunities. No one is asking pension funds, insurance companies, or governments to do charity here. These are great investment opportunities.
And are you investing solely in the companies that are coming through LocalGlobe, or are you looking at other opportunities? As you're right, there's 700 of these Thoroughbreds. There's massive amounts of opportunity across the continent. Are you looking at doing investments across, companies that haven't come through your other funds? Yeah,
but one of the nice things about LocalGlobe is that, there are 4,000 active VCs in EMEA. And if you're looking for a high signal-to-noise ratio for follow-on at the early growth stage, LocalGlobe is number 1 picking unicorns at seed, it's number 1 picking colts at seed, and it's number 1 picking Thoroughbreds at seed. So it is a very, very good high signal-to-noise ratio for Latitude and Solar to pay attention to. But, that probably makes up, I'd say, 80% of our investing. We definitely don't see everything. And, we are very, very happy to invest alongside folks at the Latitude and the Solar stages in companies that we think are going to be great businesses. And we've done that frequently across EMEA. We've also have again, this has been from our own balance sheet, a program that we call Basecamp, where we are an angel LP in, I think now 70 or 80 emerging managers, 45% in the US, 45% in EMEA, 10% in APAC, and actually on a look-through basis, I think Basecamp funds would be number 4 globally picking unicorns at seed. So I think between LocalGlobe and Basecamp, we feel like we have a very high signal to noise ratio at that very early stage. But obviously, we want to be able to see those companies that we still believe, at a Latitude stage, and then at a solar stage, still have a lot of upside. And I think, the thing that we've all noticed in the last 5 to 10 years is, companies don't stop growing, they don't stop compounding. This is the great companies, when they are at the scale-up stage, or even when they've gone public. And, this is definitely something we wanted to participate in, through solar, especially when you've known companies for years.
And so to that point, is there a last stage that you will get involved at, or are you looking to invest in companies post-IPO?
We've not done post-IPO investments, but in situations where we feel that a company still has a lot of growth ahead of it, we've invested into the IPO. So Raspberry Pi is a good example of that. I knew Eben maybe 10 or 12 years ago when at Cano we were probably the first OEM to use a Raspberry Pi, and fast forward 10, 12 years, he'd built a company that was generating hundreds of millions in revenue, tens of millions in profits. 95% of the business was outside of the UK. He'd done this with primarily an engineering organization, and we felt that this was an early stage scale up. Raspberry Pi, I think after Apple, is the second most followed tech brand on Reddit. Wow. And these guys are selling semiconductors for $10. And if you asked Eben, which I did in the year before his IPO, what really motivates you? He said, I love making chips. And, that's amazing. The kind of thing you want to hear from a founder. This is something I still love doing, and I'm early. And I think, you don't have to be at seed to be early, but obviously our DNA, and this is, I think, the Power Law ranking demonstrates this. Our DNA is at that seed stage with LocalGlobe, but we wanted to be able to create a business with Phoenix Courts where, in the early growth stage with Latitude, and then in the scale-up phase, we can keep working with these companies. And again, another example for me would be Wise, where, obviously we were investors in the seed rounds with LocalGlobe, and then we were able to invest with Latitude, but we invested into the direct listing with solar, and I think that was 4 or 5 years ago, and we're still holding our solar shares because we think there's a lot of upside in Wise. Most people are just realizing they're FX rails, they're not just an FX service.
Yeah, amazing. Okay, so I guess you're leaving the option open to invest wherever you think that you may still be early, and wherever you think there is upside to be gained.
Yeah, early is a state of mind. It's not a stage.
Yeah, got it. Okay. You also mentioned that you've been working with governments or working on policy about late stage growth capital and kind of pushing to get more capital invested at the late stage. We're seeing a lot of noise in both politics and the tech communities, and I think Elon Musk has been a driving force in the US around getting tech figures, tech entrepreneurs more involved in government policy and helping to shape government policy. What role do you think senior VCs, serial entrepreneurs should have in shaping and defining government policy?
I've always believed this to be true, and it was not a popular opinion 10, 20 years ago, is, if innovation is a fundamental part of society and is going to be part of, every sector and people's daily lives, we need to have grown-up conversations with policymakers and regulators, and we need to have that at the earliest stages. And I've always believed that, one of the incredible attributes of London, of Paris, of Brussels, is that we're close to policymakers, physically. And that there are much more opportunities, and I've definitely experienced this very much in the UK over decades, not with one government or another, is that there is an understanding that innovation is key to economic growth, but innovation without principles, without values, can have some very bad unintended consequences. And I think, we've seen that with Silicon Valley. And I think, we talk about this idea of a new Palo Alto, and people are like, oh, does that mean you want to be the next Silicon Valley? It's like, no, we want to be a different Silicon Valley. And the difference is that innovation without values might not be worth, very much, other than sort of economic gains that go to a very small number of people. And, if innovation is really going to serve society, it can have positive impacts as well as positive economic impacts. And I think one is able to do that when one is in a sort of a diverse and mixed economy, like we are in London, like we are in Paris, like we are in Amsterdam, like we are in Brussels. Whereas in the US, you have these very specialized economies. San Francisco is a tech economy. New York is a finance economy. LA is an entertainment economy. DC is a political economy. And, we may not have the scale of the US, of course we don't. We don't have the scale of China, but what we have is like incredible diversity and interdisciplinarity. And I think, and this is our bet for the next 2 decades, is those things are going to matter, and they're going to matter more. And this new Palo Alto, which is already, by the way, the second best innovation cluster in the world after the Bay Area, is going to produce companies that don't just create massive economic value, but also create very, very positive, social outcomes.
Amazing. And I spoke the exact same thing about Barney from Clio 2 weeks ago, who's got very strong opinions on promoting British and European tech, but almost doing it in that sort of way that incorporates the values that we're really proud of in Europe.
Very delighted to have backed Barney both through LocalGlobe and Latitude, and look forward to doing it through Solar as well.
So an amazing company. We're out of time. But look, thank you so much for joining. It's been an absolute pleasure to have you. Congratulations again on the rankings. It's great validation of what you've spent 10 years building, but I guess even longer building before that. So thank you, and let's stay in touch.
Thanks, Seb. Thanks a lot.